welcome our guest on the show today and find out more about the policy. So we have with us G. Chokalingam. He is the founder and MD at Economics Research, and we also have with us Mr. Amit Somani. He is the senior fund manager at Tata Asset Management. Shell is also now with us. Shell, first of all, coming to you, what do you make of this policy, and what's really not working for the street as we are seeing deep cuts?
So the two things, Tanya, that are not working for the market are incremental CRR deposits of 10%, to mop up excessive liquidity, which the central bank governor has put in. That's a very, very big negative seen by the market, especially on banks. And the top losers are the Nifty Bank, the Nifty PSU banking sector index, the Nifty private bank index. These are the top three losers. And of course, the raising of the inflation target from 5.1 to 5.4%. So these two things, and the fact that the governor has repeatedly said that the focus remains in aligning inflation to what we have said earlier, which is 4%. So these two things are what are bothering the market in the short term. But we have Mr. Chokalingam who's seen the market much more than I have. Let's go to him directly. What do you think, sir, are the other things that caught your attention in Dr. Shaktikanta Das's statement?
Frankly speaking, nothing has caught my eyes in a significant manner. Because all are in expected way. The status quo, most parameters, the status quo is maintained. These are all in expected way. So there are two important perspectives I want to present, to understand monetary policy and markets. The one, from starting from 2014, the repo rate, benchmark interest rate has come down from 8% to 4% in May 2020. So we had a stability of economy during this process, and then we had a major hit in terms of COVID, which was deflationary. So it came down to 4%. So almost a 400 basis point cut happened. Then the second phase, starting from May 2020 to February 23, the rate has gone up to 6.5%. So 250 basis point rebound happened. But this rebound happened because the inflation went out of control. So now we are at 6.5%. Are we going back to 8% or are we going back to 4%? That is a question. Certainly, in the light of today's policy announcement also, I can make a very bold statement that we are certain to be in the mid-range of around 6.5% or 6%, at least for another 3 to 6 months. And it is possible that this rate can come down to even 5.5% in the next 6 months to 12 months. So that is the forecast, because a lot of good things are happening on the inflation front. We all know that WPI inflation is negative, and the CPI inflation also has come down a lot. Now there are only two problems for the inflation and markets. One is the rising oil price. If you see, oil price used to be as low as 47% on year-on-year basis 5-6 months back. Now world oil price is down just 8% on year-on-year basis, because Saudi Arabia has cut the oil output, so it's going up. This is the area of concern. And then vegetable rice, wheat prices rise in the Indian economy. But if you want to decompose the inflationary impact, there are two factors. One, short-term disruption, like tomato, onion prices, vegetable, fruits prices, they shoot up. That I won't call it as a structural change. That is because of supply-demand gap in the very short term. I would call it as a disruption. Second, the inflation rate jumps or falls because of the structural change. They are bound by the global factors and domestic factors in a big way related to GDP and oil prices. So structural factors are conducive for India's inflation to fall further, because China yesterday they announced certain numbers which show sign of deflation. European economy almost stagnant. US economy has come down, and US oil output is at a record high level. So therefore, the oil price is unlikely to shoot up further, and the slowdown in the growth is also likely to moderate the metal prices. Only copper price has gone up. Still, all other metal prices are quite low. So therefore, India is in a best position, to ride on, the contained inflation rate, and RBI, to be very straightforward, I think it has no role to play in the stock market for next 6 months, because they have to maintain this mid path of around 6%, 6.5% for at least 6 months. Then they will start cutting down. So there is no worry for the market at all. And the market is falling because your market cap is around 300.
It's down.
It's down because of profit booking. The overall market cap has hit 300.
Because of
profit booking. The overall market cap has hit 300. On the growth, one is the banking, obviously, topmost sector, which is 16% credit growth, and followed by automobile sector, and then to some extent the telecom.
Okay,
So
absolutely.
many sectors are growing in single digit, valuation comfort is not there. So that is the reason for correction in the market. I do believe another 2-3% correction can happen in the stock market in the short term.
Sure. And what are your thoughts on the rate trajectory from here, Mr. Chokalingam?
Yeah, the rate would remain at 6.5 at least for another 1 or 2 months, or 2 even 3 months. After that, it will definitely fall, because the world economy is not going to pick up in a big manner. Oil price is not going to hit triple digit because of the signs of deflationary condition in China and near stagnation in European growth and slowdown in the US economy. Even in India, if you see in July, our oil import has come down to 8-month low. So there are a lot of signs of worldwide correction in the growth. So therefore, oil is also going to be comfortable. And most importantly, on the disruption factors which I mentioned, vegetable, rice, wheat, fruit prices. Very interesting data point. As of yesterday, the rainfall has improved. Today, the cumulative rainfall used to be deficit in double digit. Now it is exactly equivalent to the long period average. The cumulative rainfall, there is no deviation. It's an absolutely normal. And second, if you see the spatial distribution, that was also concerned till 2 weeks back. Now 72% of 36 subdivisions have received a normal or excess rainfall. Even the Kharif area has improved to last year level. So this is only a temporary phenomenon. The vegetable, fruits, and rice, wheat prices, within 1 or 2 months, all this would start coming down once you really get the Kharif crop number followed by winter crop number.
Okay, absolutely. Let me now get in. Let me now ask Amit Somani, Mr. Amit Somani. Mr. Somani, what about you? What do you make of the decision, and which sectors, according to you, will be in focus after the policy, and what really didn't work? I think the incremental CRR thing, that is something that the markets are not really liking at this point in time.
Thank you. So I will give this more from a fixed income perspective rather than broad market. But yes, so ICRR is something that market was not expecting, and they gave, I think, back of the envelope calculation seems that it will increase the CRR by about 3 to 5% of what currently banks are required to maintain with RBI. This applies only on NDTLs post 2019, and this comes into effect on 12th of August, and it gets reversed on 8th of September, as mentioned by RBI. So one, I think banking system, will have to show that additional amount 3 to 5% in terms of parking with the RBI. That will have some impact on whatever the NIMs, if I were to put it that way. But I think beyond that, RBI is also very mindful that there was a flush of liquidity in a banking system, given post 2000 rupees callback into the banking system, and July and August are typical months seasonally. Shows the currency circulation going back into the banking system, which means that RBI utilized this window, July and August window, to hike this through ICRR, and trying to address it, and then look beyond once the reversal starts happening, as also mentioned by Mr. Governor, that the festive seasons, and I think they are very clear that they always want to maintain a liquidity to the extent that doesn't hamper any credit growth. it seems, I mean, there is a broad number
Right, Mr.
which.
Somani. Let's look at the markets for a while. There has been a drastic fall in both the Nifty and the Bank Nifty. Of course, as you rightly mentioned, it's the incremental additional CRR that's come into the banking space. We've seen a mild green
I'm
tick
not
at
able to hear.
19,530, but unlikely to be held. Mr. Somani, the governor has gone at lengths to describe the wonderful situation that India's macro and micro picture are in. Given the fact that we've corrected, you know, quite okay from the recent top that we've seen on the Nifty and the Bank Nifty. As a fund manager, given the second half is in front of us, what are the sectors that look good to you for you to put in good money?
Uh, I am sorry, I don't want to get into the sector discussion right now. And this thing, I will leave it to other guests for that.
Okay. Mr. Chokalingam, what are the sectors that look attractive to you at present levels?
Certainly, the banking sector, as I mentioned, the interest rate cycle has peaked out. It's going to fall maybe after 2 3 months. The chances are very high. And second, as I mentioned, the rainfall has improved. Kharif area under Kharif crop also has improved. So that is also going to be positive in terms of containing the inflation rate. Other directly, the tailwinds are also there for the banking sector. The credit growth is now above 16%, which is a 10-year record high. The quality of asset of the banking sector is also at the 10-year record high level. So therefore, yes, there could be some profit booking volatility, but ultimately in the short to medium term, the banking sector would do extremely well. And followed by automobile sector, particularly stocks like Maruti. Personally, we don't have, but we have a buy call on Maruti. In general, auto sector will do among the sectors. And third, the telecom, because non-tax revenues of the governments are coming down after exhausting the cash pile of the PSUs. So the one area where the non-tax revenues can be increased is allowing the telecom companies to consistently, in a small way, to increase the tariff for the public, and that's already visible. So that would be positive for mobile operators. These are the three sectors which would do very well. But otherwise, from a defensive perspective, one can consider FMCG. But if you ask me what can grow faster among all the major sectors, these are the three sectors which can grow much faster.
Right. Mr. Chokalingam, let's take this discussion a bit forward. You are a very good stock picker when it comes to mid caps and small caps, especially in the banks. What would you prefer?
A little late, to be honest, because the banks are run up. But still, if there is any decline, one can buy Bank of Maharashtra. Bank of Maharashtra looks to me like a mini HDFC bank. It should not be misinterpreted as comparison of the stock prices. I would not say that it will go to 3 digit, but if you see the parameters, whether it is a credit growth, CASA ratio, net NPA, provision coverage, excellent. I mean, and apart from that, in Q1 FY24 itself, the bank started making provision for ECL, expected credit loss provision, which is going to be implemented from the current year. So that is a one stock for medium to long term. Amazing stock. Net NPA is just 0.25 or 0.24, which is the lowest in the industry. And second in the large cap, definitely HDFC Bank. But for long-term wealth creation, I'm extremely bullish on Bank of Maharashtra.
Okay, Mr. Chokalingam, and one quick word on the way, global macro indicators have also shot up, be it dollar index, yields have surged a lot. There's also a talk of some of the US banks into trouble, that is, I'm talking about Moody's commentary. So could that also cast some amount of shadow on our macros as well?
They will give opportunity in the stock market. Unfortunately, I'm sorry to sound a little overconfident. This is what I maintained 2007, 8, 9 Lehman crisis also. The US economy was shaking, but our markets fell 22%. And foreign investors ran away from India. So I was comparing with, when you have a tremor or earthquake, when buildings are shaking, you try to move to the stronger building, but they went back to shaking building leaving a strong building India. So similar things are keep happening now and then. But I must tell you that the Indian banks have nothing to do with US banks to a large extent. More than 90% of the lending happens within India. More than 90% of the resource mobilization by the banks happen within India. So we are least linked fundamentally or economic in terms of economic parameters. But certainly perception in the short term plays more role than the economic reasons. So it can give opportunity. Even if you look at US economy, they are talking of $1 trillion of outstanding credit card by US citizens. So then they are talking about $1 trillion interest payment by US government every year. So therefore, India's story looks amazing. Yes, right now valuations are stretched. Right now there are three short-term risks: November, December election results, and Rajasthan, Madhya Pradesh, and then May 24 general election. If we can pass three short-term risks, I would like to say that India is set for an amazing wealth creation story for another 5 years, only subject to any possible war from North Korea or in Taiwan. Otherwise, India's story is going to be excellent. Let us recall what S&P also said. For next 7-8 years, our average growth will be about 6%. So that will be the fastest growth in the world.
Absolutely, Mr. Chokalingam. Lastly, any picks that you have from railway pack or defense pack, these sector have been buzzing off late, and any picks that you have from power sector as well?
Yes, power sector, we have a buy call on Tata Power. Personally, I do not own it. I would say I have pitched this as a great futuristic stock. The Tata management, I don't have to work for it. What is interesting is that they have been saying that the renewable energy would become 80% of the total power produced by Tata Power, and they have been working on it in a very successful manner already. Already they delivered credible increase in the share of renewable energy in the total power, and they are also doing very well in rooftop solar. So this is a one stock, not for short term, medium to long term. I think this is going to be a ESG stock, and it's going to be a stock which will be liked by a lot of foreign investors in the next 1 to 3 years. And I would advise continuously, some caution for the retail investors on, railway stocks and different stocks. So let us not forget the fact that whenever there is a bull market in the small cap space, these two jump like anything. So you have to be very early entrant to make money. Otherwise, you will have to wait for another 3 years to get back your principal. So I do not see the valuation comfort in any of those. One can consider, Indoco remedies. I personally again do not have. This is our official buy recommendation. I've been successful, in giving a recommendation in the past on JB Chemical and Unicom. So after that, I was breaking my mind what could be the next one. Of course, it cannot give you reward like a JB Chemical. That was outstanding, but I definitely
absolutely.
Indoco Remedy can give excellent return because it trades at 3 times domestic branded sales and 1 time export sales. So many branded sales companies are trading at even 7-8 times to sales, enterprise value to sales. So I feel it can create a lot of wealth in the medium to long term.
Okay, absolutely. Got that, Mr. Chokalingam. But Mr. Somani, coming to you now, what are your thoughts on the rate trajectory from here on?
Sure. So I think policy is broadly in line with what market was anticipating. The ICRR that we mentioned, so I think that will have some impact on the short-term rates for at least next 1 month. The 10-year currently continues to actually hover around the same range. It was a little higher, which only, kind of reconfirms that the entire policy was in line. In fact, the market feels confident that RBI has laid emphasis of on the spike in inflation. Do they remain confident that vegetable prices will reverse? I think they are at the same time they have mentioned that they will continue to act if necessary, which gives confidence to the market that RBI continues to hold Arjun eye on inflation number. So while the near-term trajectory seems to be on a higher side, with the kind of revision that we are seeing, probably this month's inflation seems upward of 6.5. The number will remain there for next couple of months. But I think beyond that, RBI the markets are also much confident that RBI has kept its eye, and thus we see that the 10-year continue to range between 7.5 to 7 quarter levels or so. Upper end remains a good time. It throws a good opportunity for someone who wants to tap into. The short-term rates are likely to see some increase, and I think most of the correction should get done by today end of day or tomorrow at max. This measure that they have taken is likely to reverse on 8th of September. So it will be a little kind of a short term pain in a very very short term.
Okay, absolutely got that. And on that note, thank you so much, gentlemen. Thank you, Mr. Chokalingam. Thank you, Mr. Samani and Shell, for being with us here on Business Today Television and for sharing these valuable insights.
If you like the video, do like, comment, share and subscribe.